Hi guys, welcome back to this teen financial literacy curriculum. And the main topic for today's video is going to be on taxes. And this is all done in partnership with 50/50 Leadership. They're a great organization, so please check them out. And so we will begin now. So, what are taxes? Taxes are mandatory contributions placed upon individuals and corporations by the government. So, if you go to a restaurant, go to the grocery store, if you buy something or purchase something, there's usually a tax placed upon a good. And in this video, I'll explain what it is. So, where does tax dollars go? So, tax revenues are used to fund a variety of government initiatives such as Social Security and Medicare, as well as public infrastructure and services. So, an example of these would be like building roads, building freeways, or schools, and stuff like that, because it all goes back to the public. And here are some factors that determine how much tax you pay. So, one would be filing status. So, whether you're filing jointly or separately, married, single, and your total annual income that you make from your job, your adjusted gross income, your tax rate, which I went over a couple videos ago. And if you don't remember, a tax rate is a rate of tax or percentage of tax you pay based on your tax bracket. And you are placed in a tax bracket depending on how much you make. So a person that makes over $100,000 per year is going to pay more tax than a person that makes $30,000 a year. And number 5 would be tax credits, which reduce the amount of taxes owed. So, how do adjusted gross income or AGI and tax credit work? So, adjusted gross income includes education expenses, student loan interest, or contributions to a retirement or savings account. And a tax credit is an amount of money that taxpayers can subtract from their taxes that are owed to their government. So let's meet Ella. Her gross pay per year is $100,000, and her federal income tax rate is 24%. So, based on the situation, we are going to see how much tax she has to pay. So, remember, as we just said, her tax is going to depend on how much she makes, and she makes $100,000 a year, which is why her tax rate is 24% because of the tax bracket that she's in. So her total income, as we just said, is $100,000. However, she puts $500 of that into her retirements and savings. So now she only has 99,500. And then she gets deductions from that. So that's another 500 deducted. So now her total taxable income, or the total income that will be taxed upon, is 99,000. And then her federal tax rate is 24% because of her total income right up here. So 24% of her taxable income is $23,760. However, with tax credits, it's going to lower the amount of taxes she owes. So it's going to be subtracted from her tax owed. So per year, her total federal income tax owed is going to be $23,260. So let's with so we are going to see how tax can be divided with this tax pizza. So this whole circle represents Ella's total income, which is $100,000. So she keeps most of her income. She keeps 59% of her income, but the rest of that in the blue, orange, and gray is how much tax she has to give back. So federal tax, 24% of her income goes federal tax. 7.65% goes back to her FICA taxes. And then her state tax is 9% because of the state she lives in. She lives in California. So depending on which state you live in, your state tax is going to differ. And with all these percentages, these are estimates. So if you really need to find out how much tax you're going to pay, don't rely on this video. You need to actually do some research depending on where you live and your income. So, what happens if you don't pay your dues, or what happens if you don't pay your taxes on time, or you don't pay them at all? So, a penalty assessment that can result in a one-time fee or charge can occur, or an interest assessment resulting in an escalating penalty can happen, and this is based on the duration of the delinquency. And by duration of the delinquency, I mean like how long it takes you to pay your taxes if you don't pay them on time. And if you really never pay them on time, then your company property can be seized. So things will be taken away from you, which you really don't want. So it's really important to pay your taxes on time. So that is all for this video. Thank you so much for listening, and please stay tuned for the next video.